Ready? Yeah. All right. Hi, my name is Francine Elmquist. I'm the Go-to-Market Director here at Neonomics. In my work, I focus a lot on what's happening in the industry, what's happening in the various markets, and what opportunities there might be. Today, we're going to talk about the transition from open banking to open finance. So let's start with a little bit of backstory. What is open banking? So open banking is actually a regulatory response and opportunity that came out of the financial crisis in 2007, 2008. 80% of the market was controlled by just a few of the big banks and the two big card providers, MasterCard and Visa. And what they realized coming out of the crash is that there's actually not a lot of redundancy in the system, and that makes us vulnerable and less resilient. As a fallout from the pandemic and the financial crash, there's less bank branches. So you can't just pop down to your local and talk to them about getting a mortgage or applying for a loan and rely on the fact that they actually know you and they know your financial situation. Now you need to do all of that online. For that to be effective, the providers need to have access to current real-time information about your financial status or situation. At Neonomics, we're focused on providing you with the tools to take advantage of that opportunity. So open banking was just the start. Open finance broadens that opportunity and enables us to provide new kinds of exciting products like smart credit scoring, embedded finance, personalized financial products and services. So if you want to learn more about open finance, I highly recommend that you check out our latest white paper. You'll find the link down below in the comments. And stay tuned for the next episode where we'll get into all things PSD3.